Good morning, this is Steve O'Hare, and this morning I'm bringing the technical analysis outlook and the levels to watch in crude oil. I'm looking at WTI crude oil first, then I'm going to look at Brent. I'm going to start with the higher time frames. This is a weekly chart, and we can see over the past few weeks that WTI crude oil has broken through the very long-term resistance line, but it has stalled around about horizontal resistance from 2019 and 2020. This saw us post a bearish, well, you could say it's a bearish shooting star formation, although the middle candle isn't a shooting star, it's more of a hanging man, so it's a bearish hanging man formation. And this is negative for price action over the more shorter term. If we look at the daily chart, we can see what prices actually did when we broke through this red long-term trend downward resistance, and we tested above it, held above it for a while, for a couple of weeks, and now have just broken back below it over the last few days. So that's negative for short-term price action. On the 4-hour chart, we highlighted this bearish channel formation, and this is a bearish flag, and this is that we saw the prices break down, but I've stalled yesterday at 57, around about just above $57, and now reacting higher. However, we do think that this reaction higher could potentially be short-lived, although we remain bullish over the more medium-term outlook on oil prices. We think we're going to run into resistance around about the $59.50 to $60 level, and we think that this reaction higher could stall around there. Now, on the Brent crude front, we see a similar sort of price action in Brent crude, and the resistance level that we see, the downward trend in resistance, comes in around about $62.50. We're trading around $61.50 now. On the longer term chart, we can see that the same sort of price action played out, but we have stalled way below the downward trend in resistance, which we still believe is a target. So going through a bit of a correction at the moment on oil. A lot of the oil prices we've seen edge higher, investors looking for bargains following the previous day's plunge. So that's what we've seen, but gains obviously capped by pandemic lockdowns in Europe and a build in the US crude stocks. This has curbed risk appetite and raised oversupply fears. So we still got that background to watch out for in this oil rally. So I hope that's helped with the levels, and look forward to speaking to you next week.